Welcome, everyone, to this week's episode of the Raising Millionaires podcast. I am your co-host, Roger, and this is...
Your other co-host, Richard Lorenzen.
Hello, Richard. It's funny. We do it every time. We get logged in and we start talking about stuff. We're like, start the podcast. There is so much going on in the news from a financial perspective.
Yes.
There is a ton going on with a better understanding of the content that we've been creating through the podcast, the tools that we've been using to syndicate and repurpose the content, and then also a lot of progress on some of the financial services side of things that you and I have been talking about for the last few months, from marketing, lead gen, project orientation, and the ability to generate lists, community, and making money. So where do you want to start?
Well, let's start with the markets. There's a lot of news. So markets are down a little bit right now, but they continue to make new record highs.
I went in on a position for the first time in like a month.
Okay, so tell us about that.
So and this is not financial advice, this is me hedging my portfolio against a Fed that may not do anything or show any signals towards doing anything tomorrow at Jackson Hole. So if Powell comes out and he is still butting heads with Trump, it could have a negative effect on the markets. And everybody is like holding their breath for 10 a.m. Eastern tomorrow or Friday for Jackson Hole.
Yeah.
So what I did is I went in and I bought the UVIX, which is a 2 times long VIX futures ETF on the CBOE. I didn't take a huge position because I'm watching how it plays out. It's also a leveraged position, being a 2X. So I wanted to get access to options in the VIX space and leverage so that a small move could have a big effect. Right now it's sitting right around $14. I'm in at about $14.80, so anything above that. So you figure that's still a 5 or 6% move, which is kind of outside my normal trade, but it's a 2X. So that brings it back down into my normal like 2.7 to 3.2 range. And I am just playing this as I don't want to sell, or I actually can't sell most of my holdings for tax reasons. And I do see some downward momentum in the market that I don't think Powell is going to give Trump what he wants. So that move then in the down of the markets, I can cover my basis with a little bit of volatility, technically going 2X long on volatility. I wanted to start with that because it's going to give context to everything else that we talk about from a markets perspective. Richard,
Yep.
What are you doing? What are you seeing?
Well, I think unfortunately, just given some of the data that's been coming out the last few days, it's looking to me, I think, a little bit less likely that the Fed is going to cut in September.
It was 97% probability like a few weeks ago of at least a quarter basis point, and it's still at 80%. I don't get where that's coming from, right? They want to say inflation is controlled and the job market is strong. I think both of those are lies. But the Fed is also like, Powell, would he feel like he caved?
I would just chalk those expectations. I would kind of just chalk that up to like blind exuberance by the market. Like heading into the last 5 Fed meetings, there have been numbers like that in terms of the expectations for a rate cut. We haven't seen any rate cuts, so I don't know. Like I was pretty confident personally about a rate cut just 2-3 weeks ago, but just seeing again like some of the prints that are coming out. I don't think we're gonna. Maybe we'll get more insight this week from Jackson Hole, but I don't think we're gonna see a rate cut in September. So I think your trade is a good call. For me, like I'm still sitting here trying to find opportunities to buy a little bit. 2 weeks ago, I did a little bit of nibbling when we had that little bit of a pullback. But markets just continue to make new highs every week, it seems like.
Would you
Lately.
agree that based on current data, trends, and momentum, that the opportunity to buy will probably be greater late October, early November than it is right now?
I would think so. But it's funny. I think we said it on this podcast back in like April. I said the same thing about the summer.
Yeah, well, yeah.
I was like, July or August, we're going to see a midsummer pullback, and the data is going to start catching up, and you'll see an opportunity. And obviously, we haven't. I can't. I can't remember a summer where we've seen more all-time highs made on the major indexes than this summer. Um, so yeah, I would think so. I would think that, October, November, there should be some sort of, you would think at some point the data is going to catch up. We're going to start to lose momentum, especially if the Fed does not cut in September. Maybe removes some confidence from the marketplace. So yeah, I mean, I have a bunch of money I still want to put to work, and I'm nibbling little by little, but I'd like to make some bigger buys, and I'm hoping that maybe October, November will be a good time to do that. But it's the S&P is up year to date now, what, 15%?
Crazy given everything.
So it's remarkable to me because we closed 2024 being up, I don't remember the exact number, but it was over 20%. And the broad consensus was that we would not see another year like that in 2025. And yet here we are at the end of August, sitting up a little over 15%. And the momentum still seems to be there for now. And then you'll have the end of the year rally as we go into December, the Santa Claus rally. So we could be looking at another very strong double-digit year for equities.
I do have to ask the question, is the AI equity bubble about to pop? You have both Sam Altman, who has no reason to come out and say that there's a bubble in the AI markets, and then also Joe Tsai from Alibaba comparing this market to significantly disproportionate weight to even the dot-com bubble of the late 90s, early 2000s. I mean, are we reaching that point where investors are just piling in money and there's not going to be better results from any of this?
I think we've reached that point. Yeah, but I've heard some comparisons the last week or two as well to, between AI and the
From
dot
other
com.
people than just me? Like, am I trying to reinforce a point
Oh
or are
yeah,
other people saying it?
yeah, for sure. I'm hearing that from traders. I'm hearing it from bankers. I'm hearing it from analysts. The timing is always, people have been forecasting this for the past 2 years, but um, I've heard some people say that the meltdown in AI could dwarf the dot-com bubble potentially.
NASDAQ came down, what, 80% after the dot-com
Maybe
bubble? Do you really think the NASDAQ could melt down more than 80%, depending on how this bubble bursts, with all of the other strong economic indicators that we have?
the Nasdaq, I don't know. Some of these individual stocks,
Well,
maybe,
Steve, okay, so here
but
is my conflict with that. And I don't disagree with you, but when you have the indices having heavier weights on individual
yes,
companies more so than ever before, but
yep,
then think that there'll be a decoupling between their meltdown and the overall indices, aren't those conflicting points of view?
they are. That's fair. I mean, yeah, if you look at look at not even the Nasdaq, right? Look at the S&P. More than 30% of the S&P is made up of what? Big cap tech companies. Um, Primarily the Mag 7. And so, yeah, it's hard to, because to me, I still think that within the AI sector, you have certain plays that, like Nvidia, for example, if there were a major meltdown, of course Nvidia is going to, they're going to be hurting, but are they going to go down 50%? I don't know. And if they remain relatively stable, will that prop up the major indexes? Maybe. Um,
NVIDIA earnings today.
but today I don't know. But a good kind of good secondary point to that, as we talk about like the allocation of some of these indices, that also I think has real implications for thinking about like your indexing strategy too, like the index
Next
fund.
week. Sorry, it's next
Like
week. Next week.
next week.
Yeah.
Okay, let's do it because I think SPY versus VTI is an important conversation. Just as two examples, like VTI not being tied to the S&P. It used to be that you buy index funds to diversify broadly, but the S&P is not that anymore, in my opinion. So does that mean instead of buying SPY, do I buy VTI, which I hold both? I think that's an interesting conversation to have.
One of the things that I'm struggling with right now that, I mean, it's a good problem to have. So in Claire and Carter's UTMA brokerage accounts,
Yeah,
they're up like 260%, right? So it would call for diversification, a reallocation of profits, but they're brokerage accounts, they're taxable, capital
yeah,
gains. So to liquidate and reallocate, I'm looking at, I mean, I could take like $1,200 in profit from their portfolios because they're minors without tax implications. They're also going to have a lower tax basis than say I would. But at the same time, in order to liquidate and reallocate, I have to buy down 10 to 20% from my break even point on
yeah.
where the current investments sit. So I've been looking at all types of different ways to try to do things. In Ohio, we do not have UTMA to 529 or Roth IRA rollovers. Do they have that in New York?
That's a good question. Let me see.
I've been looking at every option, 1031s, everything to try to figure out how I am going to help them diversify without major tax bills, or even more important than the tax bills, it's that reallocation gap, right? They're kind of just like stuck in their investments.
So generally, it looks like the answer is yes, you can do that, but there are tax implications because the UTMA account needs to be liquidated into cash, which is going to trigger the capital gains
Some
tax.
states actually allow you to roll over assets. Ohio was not one of them.
So yeah, New York, it looks like, is also not one of those
I wouldn't
states.
think that they would be. New York wants their tax money.
Yeah, like we're generally not known for being a tax-friendly state, so this would not surprise me. But it looks like if for New York, you would have to liquidate the account to cash, you would have to pay
Yep,
the
same in
cap gains
Ohio.
tax if it applies, and then roll it over.
I don't know if I asked you okay, Powell at Jackson Hole on Friday, 10 a.m. Zero, quarter, 50 basis points. What do you think is going to happen?
Zero.
I think zero also. I guess we kind of inferred that in our last conversation, but again, you look at all the economic indicators, it makes it hard for their dual mandate to allow them to do either of those. And then you look at all the political headwinds that Powell may
Yeah.
stand strong just to get out of his term and be able to leave, like saying that he was not pushed around.
Yes. Well, I think so. Friday, I would say zero, most likely at Jackson Hole. And then the administration, the Trump administration, has announced that they're going to be beginning to interview new candidates for Fed chair on September 3rd. I think is the date that they provided.
A lot
So
of people think if he goes zero, that Trump will fire him.
yeah, so what I'm saying is like he is likely out of a job. I think that Powell,
Wouldn't that, well, oh wait, that's on the third
I
though.
think his integrity is solid, and
His
so
integrity is solid, but wouldn't that not send shock waves through the market for the Fed to look like it's losing its independence?
I think it will. Um, Interesting article in Barron's over this past weekend about that, talking about the independence of the Fed, which I didn't know a lot about until reading this article. But apparently, the Fed generally was not number one legally; they're not mandated to be independent. But also number two, like in practice, they generally were not very independent until about 1980, when Volcker took over. Before that, for the most part, it seems like the Fed was always kind of a casual extension. I'm saying this loosely, but more or less like a casual extension of the demands of the White House. Um,
Interesting.
and so, and Barron's ran this article, which is also significant from like a market sentiment standpoint. So you have investors digesting this info. Um, yeah, I would think that if Powell is fired, this would send a negative message to the market about kind of the overall governance
And you need to
direction.
be careful though too, because there's not a Fed vote at Jackson Hole. There's just a conversation that
Right,
sets the tone for what's going to come up
right,
in
right.
September. I don't want to make, I want to make sure that I didn't misstate that. But there's
Yep.
a lot being laid into what he may or may not say.
Yep. Yeah. I think he'll. uh, People are going to be looking to that press conference for some sort of guidance, telegraphing what's coming. I think if he says anything, it will be zero. That they expect to see no change. Inflation numbers still came in. Even though they were below expectations, they were still higher than economists would have liked. Um, so I don't know. The only thing that the only thing that I would say rate the argument for a rate cut might have going for it is that there does seem to be a meaningful softening in the job market. Um, but with inflation remaining high and generally other data looking pretty strong and the stock market reaching new highs, I don't know if you're going to see a cut in September. And so, if
This is correlated to the job market. I have to ask if we're in a zombie economy. And I'm more referencing big tech's gutting of leading AI companies than anything else. There was a great article in CNBC today about how people are joining these fast-paced startups, like people always have, to get their equity in the companies for the potential future, the exit they're going to get. And then investors are piling money in these companies. And then now the major tech companies are coming in and gutting leadership and leaving like a zombie framework of a company. And that means the investors are getting screwed. All the people that join the company in order to get their exits are getting screwed. Like one or two people leave a company. What was a great example where there was a $2.5 billion offer to buy? Facebook came in and offered $250 million to the top two people. They left. The deal collapsed. And then the company ended up selling for $250 million just because there's nothing left of it. So like 10%.
yep.
Is there? There's definitely an ethical problem here, but do you think there's a legal problem with these companies doing this from the standpoint of what those founders are doing to the investors in those companies, or how much they're screwing over their entire team who is there to help build everything, but now is left holding the bag with nothing?
It's interesting. I mean, if we were talking about like, is it fraud, right? I think to meet the definition of fraud, there needs to be some kind of malicious intent included. Um, so, so I that but that becomes a lot harder to prove.
I smell lawsuits coming, and rightfully so.
Yeah, it reminds me of the phenomenon of maybe this is like a decade or a little more than that ago, of the phenomenon of zombie companies, which were basically companies that were dead essentially, but being held up by cheap debt. And so they were able to continue operating. But as soon as interest rates started going up, and liquidity left the economy, a lot of these companies started failing. And that was maybe it was during like the '07 or '08 economic crisis, but that was a very real thing that contributed to some of the economic challenges that we had. And so, yeah, I mean, it's an interesting concept. I don't know if it legally meets the definition of fraud or something else, but
I definitely thought it was interesting as someone who's invested in a lot of startups. If I had money in these companies and they went from a $2.5 billion exit to a $250 million exit in a matter of 30 days, right, that 90% decrease in value because two people out of an entire organization took individual paychecks and left investors and the rest of the company holding the bag. There's an issue there. I think it's going to come back to bite a lot of people in the ass. And it's also, I think, hindering innovation, right? Were these the companies that were going to make the next big breakthrough that now are being sold for scrap?
yeah,
There was
it's
another interesting article because, of course, this always affects the decisions that I make in the past. Like, what is the correlation between AI and blockchain and NFTs from a market adoption perspective, both for the people that build, right? They're talking about a whole generation the Gen Zers who really are disenfranchised with new technology because they were so heavy in blockchain, they were so heavy in NFTs, and the promise that all the major tech companies made and investment opportunities, only to watch all of that vanish. And now they're being asked to go in and trust AI again.
Yep.
I thought
Well,
that was an interesting point of view.
I think that's a very real thing. I also think that a lot of young people are effectively being shut out of this new phase of like economic tech revolution because of how off like a lot of this stuff is taking place in private markets, not the public market. And so a lot of young people are being shut out of a lot of this innovation and progress. So you have on the one hand, like you said, that a lot of them are burned by blockchain and by NFTs and ICOs and crypto. And then you also have the fact that they can't even participate in a lot of the hottest companies right now in tech that are really disrupting, whether it's AI or other spaces. um, I think that's going to have really very real implications for the future of like how capital markets work because private equity is just eating up everything. Not
No,
just
they are, and it's not even necessarily private equity. The major tech companies will swoop in, and why not spend $250 million on two people instead of having to buy the company for 2.5 billion and then not have the dead weight, the administration, and more importantly, the regulatory hurdles to jump with it, right? You write
yeah,
a check to two people, they show up to their office the next day. You didn't have to go to get anything cleared by the government. You
yep,
didn't have to worry about any of the major
yep,
financing of it. It's just crazy.
yep.
This is a two-part conversation. It has to do with investing and AI. What if AI doesn't get any better from here?
Hmm.
What if what we're seeing today is the breadth of AI's capabilities for the next 5, 10, 20 years?
From a tech standpoint, is that possible? Isn't like just the natural like evolution of most tech, like the internet's always gotten better, right? Well, you
Well,
kind
it's
of
gotten
better for
faster.
society.
But did it ever? I mean, what's different about the internet of 1999 from a core technology standpoint and the internet of today, other than we can access it faster?
From a core technology standpoint, nothing. But
Exactly. Okay.
the applications of it,
Well, the use case of it, think about it like this. So if AI today, the level of intelligence that it has with hallucinations, capabilities, like we can continue to make it faster, but it's not going to get any smarter for the next 5 or 10 years. So we're going to keep building on top of this set inference capabilities that it has now. We'll continue to make it faster, but the output's going to continue to be the same.
but you may find new because if you think about how few people today really use AI and really how few companies to use it in a meaningful way, will those companies continue to find new use cases for it that could increase the value that it brings to the marketplace?
That's the second part of this. We talk about this guy all the time now, last two podcasts, Lee McCabe from
Yep,
LinkedIn. He
yep,
had this great comment where he was talking about, and I agreed with him because like I'm in these vibe coding communities and I'm watching what everybody's building, is that 99%, he said 98, I said 99% of what everybody's building with AI is just the same stuff built differently, right?
yep,
It's a CRM, but built with AI. It's an
yep,
email marketing platform, but built with AI, right? Like
yep,
we've had machine learning platforms since the 2015-16 that could aggregate data, create content. Like none of that's 10 years ago, none of that's new. What he said is what can be built with AI that couldn't be built without it. That's where the next iteration of this is going to be. If AI doesn't get any smarter and AI doesn't get any better, and we're not talking about agentic AI, we're just talking about the core basis. It's not going to be about how everybody keeps building more things with it. It's about who figures out how to build something that couldn't exist without it. And his example was like the mobile revolution. It wasn't like people built mobile websites, they built mobile apps, but Uber changed the way that we access transportation, right? Who's going to build an Uber style AI infrastructure? Vibe coding is a good example of that, right? It has completely changed the way that development is done and upended an entire industry. But what is that next idea? Because I'm looking at like, I just published my 20th AI app. Yay! Every single one of them is just a version of something that already exists, but I either can't use it for what I want to use it for, or I don't want to pay the monthly subscriptions, or I can't interconnect them in any way. And they're great. They are changing the way I approach business, but they all existed before this AI revolution. I'm not building anything revolutionary.
Hmm. What if that were to be the case, what implications do you think that that has for the stock market?
Well, now the companies that figure out how to do it, right? If I was looking in early stage or pre IPO companies that have found a way to use AI to individualize the research on specific cancer cells to come up with a very unique treatment for every different type of cancer dependent on the person's individual DNA, right? Humans can't do that. Supercomputers haven't been able to do it yet. But if AI can all of a sudden do it, to me, that's something that we couldn't do without AI. But in the stock market or in these tech companies, we're all just trying to do the same shit, the same stuff with a different tool. Yes, we can do it faster, we can do it less expensive, which is good. It changes markets. But it's not the Uber. It's not Uber yet.
Hmm.
What is going to be that? If you ask AI that, AI doesn't know, right? Every tech bro is logging into ChatGPT and going, what's the $100 million startup that I can create? Give me a pitch deck without any dashes in it so that I can go out and raise $1 million at a $100 million valuation and turn it into a $100 billion company using AI. That's probably searched every 60 seconds in the United States.
Yes.
AI doesn't know the answer to what AI is going to do. If it did, we'd be at the next level of AI. Let's
Right.
pause for a moment for a message from our sponsor. Your AI is not powered by V8 Energy, but if it was, it'd probably be better than it is.
Well, let's talk about then for a minute potential. So I sent you an article maybe over the weekend or maybe it was yesterday. I can't keep track anymore about basically a lot of these doomsday preppers that are specific to AI doomsday scenarios. And so the article, I think Business Insider wrote the article and it outlined like some of the ways that potentially AI could end civilization and a lot of these tech bros that are building bunkers and all sorts of things to.
The stuff about what Mark Zuckerberg's building on his island with like guard towers,
True.
nuclear, like all kinds of bunkers. Like,
Fair
why?
point. So for example, one of those scenarios that was in that article was AI potentially creating some sort of human civilization ending pathogen or biological threat, right? Do you think that is that a probable scenario in your?
I mean, it's in every movie that you ever watch about like the zombie apocalypse or
Yep.
like the end of times where it does it to protect humans from themselves because we are oh in Animal House from the 80s. Like
Okay.
three of the actors are sitting there smoking with their professor in a bathroom and they start talking about the microcosm of the universe and how the expansiveness of the universe is directly similar to the cell structure inside the human body: electrons, neurons, spinning, space, growth, all of those types of things. And it leads to the theory of, I think it might be called exponential minimalism or something like that, that we as humans are cancers on a cell, i.e., our planet, and that we are destroying this planet as cancer would destroy a cell in the body. If AI was to make that assumption about us as it would cancer in a body, then how do you stop the cancer from killing the cell? Well, you've got to kill the cancer, and we're the cancer. So
Mm,
AI could easily reach that conclusion if we're asking it to do it inside the human body because there's no difference between the two,
mm,
right? You can write in the rules, humans aren't cancer. Don't kill the humans. Every movie that goes wrong, and movies don't lie, right?
that's right. That's right. So it's
You throw out
interesting.
a bunch of college kids smoking weed in a bathtub on a movie in the 80s would lead to AI's apocalypse in, let's say, 2028.
I mean, it's really interesting because you do have I don't know it'll be interesting to see how that plays out. But when you talk about like AI, could it be at its limit? Is it going to get any smarter? Is it going to plateau for the next 10 to 15 years? Um, there is that other side of all those potential risks if it does continue to get smarter, and that's
Is it a bad thing if it stays? I been helping a lot of people in the Base 44 Discord community because there's a core flaw that they all have in their development process that's causing so many of their problems. And I keep telling them AI's dumb. You keep thinking AI's smart and it's going to fix itself, right? You're going to make a mistake in the code and you're going to tell it to go fix it. And it's going to be like, oh, I made it wouldn't have made the mistake to begin with if it knew that it was a mistake. So it can't go fix something that it didn't know was wrong. You have to be able to go in and through console and logs and code and fundamentals and go in and find the problem and be able to articulate to it what is going on. They all make the mistake of not building out an admin platform that manages basic infrastructure, and hopefully that problem will be solved soon. Where does AI have the most potential? To me, it's agentic AI. And I'm watching what Microsoft and Azure are doing this. It's in building the army of AI agents that are going out and doing monotonous, soul-crushing tasks and getting it to an 80% success probability, and then using other AI agents to review it, and then other AI agents to progress it. And as that infrastructure is built out, for example, we talked about how I built out an AI agent that would post our podcast for us, but it made a few mistakes. It wasn't setting up the right framing. It wasn't adjusting the captions. It can be taught to do that.
Yep.
But it might take it 1 hour to do what I can now do in 45 seconds.
Yep.
So how do I speed that up? Again, talking about the iteration of AI that will lead to improvements, agentic AI or AI agents built in multi-layered systems that continue to become faster and faster and faster.
Mm.
I thought it was interesting in this last week or this last round, right? I am looking to how am I optimizing the amount of time that it takes to take all of the content from the podcast and disseminate it out? I was trying to do it with AI, and believe me, big parts of it are, right? Copy paste summaries into AI to get titles and descriptions and posts that meet certain criteria. I've been able to take one podcast using Riverside, using Later, and using Repurpose now. And 2 weeks ago, it was 21 posts in about 3 hours, all in, all problems, all editing. And then last week, I think it was 1 hour and 7 minutes to get 28 posts live. And that's still doing them manually one at a time. AI can only get one done in that amount of time. So I would love for AI to do more. And if I could think about it, if I could get an AI agent that didn't make mistakes and didn't hallucinate, didn't get lost or get into stuck redundancies, and I let it run for 24 hours, I could set that up to start when I'm sleeping and be done by the time that I wake up and still be better off, even though it would have taken longer, but the accuracy is just not there.
AI is not that smart.
AI is dumb. Don't tell AI, like, AI, I love you. When you take over the world, keep me around, I'll help.
It reminds me of
listening.
Another study that I just saw over the weekend, and I think this one, I think Diary of a CEO podcast posted about this one, but there was a study that was recently done that found that when people use AI, their brain activity decreases 47%. You saw that one?
Yes, I saw another one. Maybe it was the same podcast where the guy that was doing this study went completely off his device for 7 weeks, and like his memory recall went from like 47% or something to like back to 98%. So it wasn't just AI, but it was a complete screen detox and how much that is killing our brain function.
So at a high level, like there's an argument that I guess that study is trying to make that AI makes you dumber.
Yep.
And
Idiocracy here we come.
Is it just that AI truly is making people dumber, or is it how they use AI?
No, it is truly making us dumber, because think about it like this. So cold email marketing, right? You go into AI, you upload your USP, your ICP, all the different things that you need in order for it to create an intelligent output. It gives you a 3 email sequence. Then you're like, give me variables. You go in and you program it in, and then you sit there and you click launch.
Yep.
Half the time, you could not recall what's in each of those 9 emails.
True. Oh, yeah, for sure.
Yep. And then I noticed, especially with Instantly, that the replies that it's creating, it's not sending them because I'm not allowing it to automate, right? They're dumb. They're
Mm.
super dumb. It's the same problem that I was having with the personalization tools that were scraping information and the ones that I watch other people using. Like, I'm getting emails saying, hey, it's awesome that you raised $120 million for nonprofits. Would you like more contacts at Goodwill? I'm like, I sold that company in 2012. So the information you scraped is 13 years old. And by the way, there's 127 Goodwill chapters in the United States. I don't need you to tell me who they are. There
Yep.
could be more now than there was 13 years ago. But like, it's so dumb that it's frustrating to even read that.
Mhm.
Oh, Richard, what's your open rate now on cold email?
No, it's probably like 50. It usually hovers around 45 to 52%.
Suck it. I'm at 88%.
Are you promising like free money in Bitcoin in the subject line?
No, my response rate is 0.5, half of 1%. But
No.
I'm still
Because
working on
everybody's
that. But
opening it.
how many emails can you send today?
We send 100 emails a day.
I'll send 1,200 today, and I think I'll be at 1,500 by Monday. The
Well,
infrastructure is so easy to build, right? And I'm running like 98 to 100% on my deliverability on each of my email addresses, but I scaled the ever living crap out of it. And if I can get my messaging right, it'll be a game changer.
so I've got a lot of questions, but I mean, the most important question would be, are you booking sales calls?
No, that's the hardest part, right?
Because
Now, think
you
of it
need to
like this
send
though. The
100.
first batch that I ever ran started 2 weeks ago. So I am less than 3 weeks into being involved in cold email at all. And
Okay.
that first group of 634 leads, which is now 629, is 78% through its first sequence. So I've learned a lot from that. But then those same leads will now run through a second sequence with more direct response style marketing. I've also learned through some of the very few conversations that I've had with people, either through email or one phone call so far, more about the pain points of the individuals and how all of this cold marketing is being drowned out. I've also learned about how all of my efforts on LinkedIn have been for waste because they're not connected. Most importantly, and I have not solved this yet, I convinced HubSpot to give me an enterprise trial to look at how I can integrate all of these tools, and I can't. And it's so frustrating, right? I can't because
Mm.
Instantly is sending from a ton of different email addresses, right? I can't get that data to go into a CRM because it's not through my email address.
Mm.
And I can't connect my email work directly to LinkedIn campaigns for multiple reasons. The first one being volume, right? If I'm getting 1,200, if I'm getting 700 or 800 opens, 900 opens a day, I can't send 900 LinkedIn connections. I'm trying to figure out how, from a scoring perspective, which Instantly doesn't have yet, to figure out which leads are the best to then go into some type of manual or even automated LinkedIn campaign. But this everything's disparate.
So I just logged into Sales Navigator on LinkedIn. And so we send 20 messages a day through Sales Navigator. And it's a separate funnel from our email outreach. It's a separate group of people. Like we're not reaching to the same contacts. We send 20 a day. I've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 16 responses in the last 2 days.
Wow, that is impressive.
Out of 20 a day. So some of this is also across the board, like we're seeing less responses to our emails as well, and LinkedIn is performing a lot better. So you might also think about doing the same thing on LinkedIn, but to a separate list of people and split testing the two. Um, but you're sending a lot of emails a day, so
I'm playing probabilities trying to get to that first customer base in this service offering while also trying to continue to hone in like an overall funnel. Like I built out this brilliant audit tool using AI that uses a methodology for figuring out where advertising applications should be made because most people don't have their data and their attribution modeling correct. Again, right? It was a simple
Yep.
calculator built on an AI app that allows you to look at 10 different traffic strategies from 5 different points of view and then aggregate the data across all of them in order to give you a view of what's working and what's not. Really, it's designed to pinpoint the fact that you, as the business owner, don't know what the output of your marketing is based on every channel relative to cost. And then once you don't know, then you need someone to figure that out for you. Some value proposition in AI, but building out that funnel, like you've been running the same business for 15, 20 years.
Yeah.
You know your customers, right?
Yeah.
You built out all of that modeling.
Yeah.
Segment. I built an AI tool that takes our podcast, right?
Bye.
No, this is actually pretty good. As soon as I get the email integration set up, okay, it takes the podcast, right?
Okay.
It reformats it, turns it into a newsletter, turns it into a blog post, and then automates the syndication of all of it so that, right, we do this podcast and it's making 28 pieces of content. Well, no, I also found out how to get it to create more snippets for us. So I can get about 14 out of each week's podcast without much duplication. So then you put it into this tool, it builds all of this out, it publishes a page on your website that's optimized, and wait till you hear about what I've done with SEO for AI. And then it creates the newsletter, which is copy paste HTML or text formatting. And now that I've figured out how to integrate, resend, and warm up email servers so quick, I can actually just have the tool sending the email newsletter instead of having to integrate it into a third-party tool. Brilliant content. The question that I have for you on the content that we create, and we think about our audience and we think about the long-term purpose of this podcast, is that it segments it out into like, this is a newsletter for entrepreneurs, solopreneurs, business owners, especially those that are parents. And we talk about building family wealth, generational wealth for our kids. We talk about marketing our businesses because we've all got to do that. And then we're also talking about AI. So it split the newsletter into 3 segments. It pulled out the core value props of what we talk about. Then when it publishes it and you click on any individual element, it takes you directly to that point in the YouTube video where we're talking about that specific topic. So it connects the website, the newsletter, the podcast, YouTube. And Richard, it's like, I give it a YouTube link and I copy and paste the transcript in it and it builds everything else out. Is that not our audience?
Yeah, it is. I mean, that's actually a tool that, a lot of influencers and content creators would want to buy as well, because that's kind of the strategy that a lot of them have, is they create one long form piece of content every week, whether it's a podcast, video, whatever. And then they have a team of, a lot of times VAs that take that long form piece of content and they chop it up into like 10 tweets and a bunch of reels and Facebook posts and YouTube shorts and all these different things. And that's what allows them to achieve that kind of perception of like them just posting constantly all the time and being everywhere. But in reality, they shoot like one 30-minute or 60-minute video every week. And then that just gets chopped up into hundreds of different pieces of content and disseminated across 5 or 6 different channels. So if you have a platform that can do that for them, that could be something they would pay for.
Yeah, this one has been pretty fun to get built, because what I am noticing is I am starting to see a little bit more engagement across all the channels, right? I'm seeing more conversations on X. I'm seeing more engagement on Instagram. We've been at this restart for going on 4 months. I have not really seen much audience growth. I always go back to Gary Vaynerchuk always talks about how you're only one social post away from everything changing. You just don't know which one it's going to be. So you might not be Mr. Beast posting 100 times a day, but the more you get out there in the more places, the more likely you're to find that like product market fit on content. But the podcast syndication tool has been brilliant. And I'm going to start going back through and repurposing all of our previous ones to build this out on RogerCBryan.com so that we can see how this starts to build audience. Because I'm not getting much engagement on long form content on YouTube. I saw Kate Buck post on LinkedIn today that they're seeing a dramatic shift back to long form, where people are more willing to spend 10, 15, 20 minutes consuming content. hoping to get more out of the content than they might 45 or 60 seconds. She's also working with Russell Brunson and like the
Yep.
biggest names, which might have a different audience point of view on everything.
Are you seeing follower growth on Instagram from these
I am
reels?
not.
Hmm.
I've
Because
been
I would
working
think
on that
like,
this week to try to dissect why. And one of the things that
yeah,
I mentioned before the call, so like I look at the three different content verticals we're creating in: wealth building or investing, AI, and then marketing. The marketing stuff is really falling flat, right? We're talking about regurgitated stuff people have been talking about for a decade. The AI stuff, one out of every five hits really well, but then the rest of them are about average. The wealth stuff, though, surprisingly, is almost always above the average trend when looking at all three of them. The
yep,
more specific it is to an individual problem, the more potent it is. And
yep.
I'm just starting. There was some layered in clickbaiting today with the content that we've talked about. In fact, I've still got two more that we got to cover because that headline oriented stuff, of course, has always worked well and continues to work well on social media. What
Well,
I
yeah.
am looking at doing
Go ahead.
is the Raising Millionaires Facebook group, the Raising Millionaires email list, and Go High Level. With all of this cold email marketing starting to work, reactivating that, and then starting to use that to syndicate the content now too at scale. But there has to be a product funnel to feed them into to justify that.
Yes.
So last night, 9:45 in bed, about to fall asleep. And I'm laying there, and I just lay there for like 45 minutes. And it's like, okay, we have to be lead gen at some point, right? Whether it's our own product or it's selling leads or it's financial services to a trusted partner. So how do we do that most efficiently? And so I started to put together a plan to build out like a Typeform style AI tool. But as I was building it and I was researching, I also started to see like ChatGPT didn't tell me this, Base 44 didn't tell me this, but DeepSeek was like, why don't you build a marketplace on the back end of your lead gen tool? I'm like, oh, okay. And then Base 44 created an API integration using webhooks. So now I can connect any website to my AI version of Typeform, and I can build out like the forms that we saw from the other wealth planning tools that has
Hmm.
multi-tenant and it has variable dynamics of where it can go. And then it has a built-in lead scoring mechanism so that we know the value of that individual lead. And then it goes directly into a marketplace where people can bid on buying that. I built
Hmm.
that last night in maybe 25 minutes lying in bed. I couldn't even log into it because I was on my mobile device. I came in this morning. I'm like, wow, this is pretty cool.
Hmm. It's true. We are going to need a lead gen component to this at
So
some point.
now that that is built, I am finishing publishing a directory website on a couple different domains that I need to sell. Because now I don't have to pay thousands of dollars for the expensive directory platforms. I just built my own.
Hmm.
I'm going to take that form tool. I'm going to build out the new entryway into the wealth plan and then build out the new wealth plan on the back of it for wealthplans.ai. But now all those leads go into a marketplace. They go into an email marketing tool. They go into the newsletter tool, which is part of the syndication tool from the podcast. If nothing else, what I have noticed from all of these AI tools that I've built, now that I can start to integrate them with Base 44's API integrations, they can all start to function together and they start to build a pretty powerful platform for the syndication of content, the capture of data, and potential revenue generation.
Mhm. Hmm. We just need to build, there just needs to, we've got to dial in the model and then we've got to get a little bit of traction around it to test it. Um,
Well, think of it like this. The wealth tool once built, we do have the Raising Millionaires list still, which has 3,600 people that downloaded the book, 860 people in the Facebook group. The last version of wealthplans.ai became me building a plan for myself. And it wasn't until then I ran into problems with that risk assessment that I went out to look at how everybody else was doing and was like, wait a second, right? You're
yep.
not building the game changing tool as much as you are learning about your audience enough to be able to feed them the products that they want and then sell them stuff that solves their problems later.
Hmm. Bitcoin's at 113 right now.
Don't tell me that.
Hmm. Interesting.
Ooh, wait, does that mean is the market coming down a little bit then? Ooh, nice. My 2x long is now at 1410. I bought it 1380.
Yeah, I mean the Nasdaq's down 1.5% right now.
Yeah, I
Uh,
bought it right before the call because I haven't made a move in a while.
Primarily Nvidia is what's pushing the Nasdaq lower. But there was also an announcement. The Trump administration came out and said that they want a 10% stake in Intel.
Oh, I've got that on here. I wanted to make sure we talked about that. So the this is how do we position this? The government is taking over private companies. So the government, through the CHIPS Act, has already promised to allocate a certain amount of money to Intel. And now Lutnick and Trump
Yep.
are coming in and saying, if you want, I don't know that they're necessarily saying if you want this money, they're saying we want 10% of the equity in the company, non-voting rights, so that there's no conflict,
Yep. Yep.
in order for this deal to continue and or the US government to get their money back. Now, why would the government be giving $10 billion to a $100 billion company to begin with, right? In subsidies and grants and things like that.
Yep.
Is it such a terrible thing for the US to build a treasury of these companies? If this is a $100 billion company, can it become a $1 trillion company? NVIDIA is $4 trillion. Or can the government 10x its money in the next 5 years off this deal?
So, what? So yeah, 2 points. Number one, that yes is a fair point. I think that there's an interesting kind of case for. We've talked about this with the sovereign wealth fund, right? Like the government could be making some of these strategic investments, uh, securing equity, and that could potentially have a significant um, impact in terms of paying down the national debt, right? So that's the first point. I think that it's good business for sure. The second point, though, is do in a capitalist economy, in a private free market capitalist economy, do we want the government running as a business, owning pieces of private businesses from a philosophical,
Doesn't
ideological?
every other country on the planet do
Yes,
that?
yes. But do we want to be? There are a lot of other countries that do that. I would say that a lot of them have, arguably maybe less freedoms in some ways.
They have less control too over the
Yes.
capital markets.
Like, do you want that kind of government? I'm not opposed to making investments in companies and getting equity in return, but do we want the government doing it? I'm not
I
saying yes
don't
or
necessarily
no.
want the government doing it, but I also look at it, they're already giving this money, allocating this money, whether it be to other countries or to companies. There has to be some type of return to the taxpayers because that's our money, right? That's our money that's being given to all of these other people to go do things,
Yep.
whether it's $400 billion for a war or it's $10 billion to pump up a technology company, right? I do like the idea of getting a return on that because there is no other way we get out of this debt that we're in. There's just no other way.
That's fair. And I think also the fact that these are non-voting, non-governance shares would make me feel a little bit better too. But yeah,
Could they get the sovereign wealth fund up to $40 trillion in market cap value and wipe out the debt in 10 years?
uh, yeah. So over 10 years, let's say that the value of the stock market in the U.S.
No, no, no.
overall.
Let's not do the stock market. Let's hyperinflate the value of Bitcoin to do it.
Ah,
Yeah, it's a very finite supply item, and you can't make any more of them. So why not just drive the price of that up to about $10 million per coin, right? And then own $40 trillion of it, and then let me exit first, and then sell off to pay off the debt. I think it's a brilliant idea.
well, how much Bitcoin does the U.S. government currently hold?
I think it was something like, was it $60 billion?
How much Bitcoin does the U.S.
Beating me to
government?
it.
200,000 Bitcoin. Oh, we got to do the math on that, but
Is that 200 million or 200,000 times 100,000?
200,000 times, what is it, 113 right now?
Yeah, was it
Well,
230
that's a
billion?
big number. Let me look at all these zeros. 22.6 billion.
Oh, 22.6 billion. It's not, it's nothing.
So,
Let's get
the,
that to up to 2.2 trillion, which will put Bitcoin at $10 million a coin.
the Trump family, through various entities like Trump Media Technology Group, owns $2 billion in Bitcoin,
Makes sense.
which is more than I would have expected, actually. Yeah. So I mean,
Well, they've run so many projects in the last few years. They probably smartly converted that money into Bitcoin.
so with the U.S. government holding $22.6 billion in Bitcoin, and then let's say they're going to get what was the valuation of the stake of the 10% stake in Intel?
10 billion.
10 billion. So they're going to get another 10 billion from Intel, and
Well, supposedly there's 400 billion in rare earth value from the Ukraine. There's another couple billion in the golden shares of U.S. Steel with Japan, right? All these deals are being done, but I even looked at it, what is in the U.S. Sovereign Wealth Fund, and there's not an established like precedent for like technically it doesn't exist. It's just a
right.
concept right now, but I feel like it's being built.
Yeah, it's clearly being built. Could it pay off the debt in 10 years? So like everything we just described adds up to like 100, maybe 200 at most billion in
No, I
today.
mean Ukraine's 400 billion.
Oh, Ukraine's 400 billion.
Yeah, in
Right.
rare earths commitments.
Interesting. That's more than most.
Supposedly, though, right? With all the stuff that was going on at the White House yesterday and Putin in Alaska, right? Unless the U.S. ends up with a major military base in the Ukraine, do we really have access to $400 million or $400 billion in rare earth materials? I don't know. Um,
That would make our sovereign wealth fund, in my opinion, pretty overweight Ukraine.
well, then we better get in there and
It's so that's like more than double everything else that would be in that portfolio. But so if that takes us to $500 billion and we want to get to 4 trillion in 10 years, we need to do a lot more of those deals to make that happen. It'd be hard to pay down $4 trillion in debt in 10
oh
years,
yeah,
but it would make a dent in it for sure.
I'm up
A very
8% on my VIX play.
well, where are you at with it?
I'm up 8%.
8%. Well, you don't
That's in the
sell
last
anything.
hour, right? That's a good trade in an hour.
Yeah, but for you, it's double or nothing. So,
Well, yeah. So we shall see. Um, man, we covered a lot today. Um, oh, I had one more here, and help me understand this. I keep hearing more and more about this, and it started in the cryptocurrency space, and it's prediction markets. How Robinhood has just issued its 2 billionth prediction contract and will now start offering prediction contracts on pro football and college football. And the Robinhood stock's up 400% in the last year. What is going on with prediction markets and how are they not gambling?
it's like poly market, right? Familiar with
Yep.
poly market? So you were able to bet on the outcome of lots of things, but the biggest thing it became famous for in 2024 was people betting on the outcome of the presidential election here in the U.S. Um, Also, I think that poly market's only open to non-U.S.
Correct. So, I mean, this coming to Robinhood is a big deal.
Yeah, because is poly market considered legally considered gambling?
I
Uh,
do not think so. I do believe that there's been a lot of like
well, it's not
major
allowed.
lawsuits against all of this.
I mean, poly market's not allowed in the U.S., so that must be because it's considered
Well, I
gambling.
think it was actually because they were seeing it potentially influencing the outcome of elections.
Oh, is that what it is? I
Yeah,
mean,
because
so,
if there's a forced
but
probability in the betting, it can skew opinion on factual basis.
but when you place a bet, you're buying a contract, basically, right?
Yeah, you're
It-
buying a contract on a potential outcome.
Would that not be a security in the U.S.? So so my opinion overall though with all this stuff like it's the new one with Robin Hood, but it also even extends to like the sports like the DraftKings and the FanDuels of the world. In my opinion, America is going down a very bad road when it comes to online gambling. And there have been a lot of articles about it in the last couple of months about the impacts that it's having on, especially on young men who are, getting into financial trouble and also mental health issues because of just how accessible online betting has become. And we're betting on everything from elections to
I
sporting.
hear about it with my nieces, well, mostly with my nephew that just finished high school and is going into college. Like every one of their friends' gatherings, all of his friends sit around and just gamble on their
Just
phones.
gambling. And I've even heard that, for people who are under 18 and can't legally use like a DraftKings or something like that, they're also using video games, like these online video games that I don't really know much about any of these games, but they're using these games where you can buy things like skins in the games. And apparently they're using these as, I guess, like tokens to gamble with each other as kind of like an underground like exchange or marketplace to facilitate gambling. So I think that all of this, as we deregulate more of this stuff, like it's just opening up a serious Pandora's box of
So this is
issues.
actually kind of important, and we can probably end with this. It appears that base 44 is having its biggest outage yet,
Uh,
where there's a data debugging issue and no one can access their backend databases to power their apps.
oh
And
wow.
I am logging in, especially into the Block Capital Fund Management platform, and we are missing a lot of investor data.
Critical vulnerability in AI vibe coding platform base 44. Well, this is an article from 3 weeks ago. Um,
It's blowing up their Discord right
well,
now.
there's a difference between an outage and a did all your data just get stolen?
Yeah, some people are on here. I lost all my users, all my data's gone. They probably had 2 users, but um, it has been kind of a battle today to build on data-based database structures and call on databases. So I have backups, um, but I don't know that
Critical
most people back
access
up.
bypass flaw. Uh, yeah, it doesn't sound great. So it's down right now.
That's what a lot of people are saying in
If I go
the.
to base 44, well, the website's up, but I guess their backend is maybe potentially having an outage. Hmm.
There's not any reports of outages specifically on their websites. We'll see. Their support is saying that they're working on it and have acknowledged that there is an issue.
Oh,
It's always my biggest fear because, like with WP Engine, even though we're comparing applications to websites, you could always go in and download your backup and get a complete zip file of your entire infrastructure. Base 44 allows you to connect to GitHub, but it does not store database records. So you have to back up database records manually or connect through API to a Supabase AWS infrastructure. So if all of these databases were wiped out, there is a high probability of that data being completely gone for many, 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 many users.
we're still so early in so much of this stuff
We are.
that
Richard,
people
any
forget.
final thoughts?
Well, people rush to build a business on AI and all these new platforms that have only been around for 6 months, and they forget the whole thing could go poof in 6 more months.
Yeah, I keep telling you, I keep building out tons of these tools, knowing that none of them are market ready. But every time they release a new update, I get one step closer, and I'm that much further along of understanding how to do it, what works, what doesn't. Hopefully, in the long run, that'll pay off.
Yep.
All right, well, I am your co-host, Roger Bryan. That is Richard Lorenzen, and we'll see you next week, where we'll definitely be talking about what happened at Jackson Hole. We'll be talking about our VIX investment and what we're doing next. We'll see you next week. Thank you.
All right. Thank you.